All right. Second video of the night. You got the cardigan on. It's that time of year. Cardigan weather. Fall attire. So let's go through this. We're gonna go over Santa Rally. Ooh, that'll be an interesting read. We're gonna go over how I set up my charts and what I use for indicators, as well as some day trading stuff. I am not a huge day trader. I do some day trading. A very small portion of what I do is day trading, although I am constantly looking for opportunities to day trade. We'll go over this later. We'll go over that later. First, let's go over the studies that I use. I use, and this is on Thinkorswim platform, which I really like. It's been nice that Thinkorswim has stayed around for so long, because using a new platform is really cumbersome and really annoying. So it's been fantastic. Okay, so 200-day moving average. A 200-day simple moving average is an absolute must-have. You cannot not have the 200-day moving average. This is the kind of final line in the sand. And there's a couple indicators that institutional investors, the people that have power to move markets, are really looking at, a 200-day moving average being one of them. We can see here, so it's a 200-day simple moving average. So how do you get to it? You go over here. So, we're in studies. You just can do like moving average. Oh, Capflox is on. Moving average. Where is this? So, momentum, no. Is it daily SMA? Man, I haven't added these for a long time. No, it's not. Let's get out of here. Oh, it's right here. Okay, so moving average, simple. Am I missing it, or can you change it in here? Let's go in here and we'll try and change it. Price close. An average exponential. No. Oh, here it is. Okay, so simple moving average. Okay. All right, so simple moving average is right here. So we're going to simple moving average and length, 200. Show study, change the color to whatever. I have mine as red. I like that. Okay. Now we can see here on this chart how important the 200-day moving average is. It's unbelievably important. So back here we can see a close below the 200-day moving average. That is a point where you go, oh no, we're no longer going long, up for any meaningful amount of time. Now we look for short opportunities. Retest 200-day moving average, gets blasted. 200-day moving average blasted. Again, it crosses above the 200-day moving average and then starts rocking and rolling. Another good buy point. Right, so 200-day moving average, very important. You can go over this with a bajillion stocks and indexes, and you'll see a similar theme. Other studies. 50-day simple moving average. This is another one that is extremely important. Buy and sell signals, 50-day moving average for sure. 50-day, and this is a simple moving average. You can see here, multiple times below the 50-day moving average, and we're failing, we're falling. Another good one is the 21-day exponential moving average, which is a quicker moving average. Exponential is going to change quicker than the simple moving average. I like to have shorter time frame moving averages as exponential. Also, I do know that institutional investors use the 21-day exponential moving average. So that's something that is very important, right? Like, again, if you have institutional investors that have power to move markets, you want to be looking at the same things that they are looking at. So 21-day exponential moving average. That's the one here in blue. In the book Tao of Trading, he says if there's one single indicator that he would use, it would be the 21-day exponential moving average. And there's a saying where, if there's one superpower in markets to understand its mean reversion, and a 21-day exponential moving average is a good mean reversion indicator for my time frame. And then we have the 9-day exponential moving average. That is something I haven't always had on, but I heard about people using this a few years back, and I've left it on ever since. When a stock is really ripping, it will respect the 9-day moving average. And you can see here kind of what I think about with indicators is, can you get any sort of signal from this indicator that's reliable? If you can, I'm cool with it. I think the 9-day moving average is a reliable indicator. Here clearly you can see that it matters, and when things are rocking, price respects that 9-day exponential moving average, 9-day EMA. Lots of people use this to trade off of. So yeah, that's why it's on here. Okay, now volume is going to be the most important, or one of the most important things. You have to have volume on here. Immediately I'm looking at price and volume. Volume because it validates a move. And you can get the power, a sense of the power and how much demand is there or lack of demand. On a move higher, you want to see, just generally speaking, lots of volume. On a move lower, what you want to see, generally speaking, is little volume, less volume in comparison to the move higher. Something else to watch out for is when price is kind of going flat after a large run up, and the price is going flat on high volume. Become wary of that. for a reversal lower. I like to have the red and green volume in here. Now I have volume with volume average. It's volume average, and I have it at 15 days. I had it at 30 days. I really have no clue. I don't even use this line as anything. I kind of do, I kind of don't. I just kind of get a general theme. So, you know, I don't know. 15, 30, whatever. We'll see. I just changed it to 15 today, honestly, because I'm like, maybe that 30-day average is too much. You know, it's hard to sometimes get a signal from this line here of anything of value. So, I mean, you can just kind of see, right? You can just kind of see it with your eye. I don't need this line here to be like, oh, it's more than it was, you know. But that's just me. Okay. And then in my lower indicators, we have RSI. You know, this is something I might need to update. I have not updated the numbers inside here at all. Maybe this is something that I need to do. This is basically on the default setting, where the length is 14, overbought 70, undersold 30. That's just where they're going to mark it. That doesn't really mean anything. It's just where the bars are. So the bars here will show up. It doesn't change anything. It's just to help you visualize it. You know, I would consider overbought, quote unquote, 80. So the RSI is a really good indicator that I've used to help me identify a time to sell. So around 70 to 80, right, is good. Also, I look at it on weekly. I've been told by a very successful trader, one of the greats, that on the monthly, it doesn't matter. So if you were looking at this RSI here on a monthly chart as an indicator to get out and thinking this is overbought, you would have thought this entire period was quote unquote overbought and would have missed this entire move. So yes. Weekly though, I believe there's more signal in weekly as well as daily. Now, so the RSI is really good for that. I am using the RSI less and less though. I might need to do a little revamping on the RSI. It has been something I've been thinking about more over the last couple weeks. Like, I'm not really using this. I use it more as a sell signal, like I said, but I've developed a new sell signal. So I might need to revamp this RSI a little bit. Okay, now moving on to the stochastic. So this is the newest indicator, and well, actually, since we're on this sell signal, let's go over how I got to 609 as a price target here, using my sell signal. I didn't use the RSI, although right here at 70, you know, but look, I mean, it's kind of, okay. So I use Fibonacci retracements here in drawings, and it's right here, Fibonacci retracements. I use this as an indicator of when to get out. And I'm no expert in Fibonacci retracements by any means, like not at all. But it has been very reliable for me doing it this way, where, and this is something I stumbled upon, you know. I don't know if anyone does this or not. I really have no clue. But So let's look at a consolidation period. So you have your breakout here and your pullback, okay? So you know that this is a period right here of consolidation. And we're talking short term. You can do this over the longer term. We're talking short term. Play around with this indicator. I constantly try and improve, right? So it's not like just so I stick to one thing. Okay, so we're going to go from the top down to the bottom. And now I'm pretty conservative, so I'm not going to go down here all the way to the gap fill or all the way down here. I just go right here. So here clearly you can see the first price target here was 609. Right here at 609. And sure enough, boom. Pretty close. Pretty spot on. So that is what I used as my short-term price target. I did not use the RSI as a short-term price target. I've done this on multiple other things. So like a Bitcoin, for example. Where was this? Here and I don't know. It's been a minute. Maybe this was it. I don't know. Anyways, that's what I typically will use for a price target. Same thing with here. And go like this, right? Now, I don't use, because you can see here, breakout, pull back. This is the consolidation period. So we're going to go like this. Bam. And we're close to here, and SPY hit its short-term price target. NASDAQ's pretty close. I trimmed basically most of my stuff. My sturf. Okay. All right. Stochastic. This is the newest one, and so far seems very good and reliable. I set this up the same way as in the book, Tao of Trading, which is a killer book. I like it a lot. It's my style. It's basically what I do. It's exactly what I do, really. I think he uses another indicator than I do. I'm more of the simple is better, but so the studies here, we'll go edit study stochastic. It's a slow stochastic. He says in his book is 60 overbought, 40 oversold. Again, I personally don't like those terms, overbought or oversold. It's just dumb. But in the book he says around 40 is cool to go after. I have just really started using this since a month ago. November, September, October. Yeah. A month or two. So I like it around 20. I would really like to move this to 20, but that's okay. It doesn't matter to me. Again, it's just a line. It means nothing. It means nothing. So, and then he has the K period at 8, the D period at 3. And so far so good with this indicator. I've been digging it. It's an indicator to buy. It's more of an indicator to buy, not to sell, where the RSI is more of an indicator to sell than it is to buy. In my opinion, that's my opinion. So, yeah. All right. Day trading. A little bit about day trading. Day trading is something where I've tried to develop my own system for 2 years with lots of pain involved in day trading. It is a small portion of what I do. It has evolved over time to basically just futures. I'm only day trading futures. There are times where I'll get in and out of trades in the same day, but that's not my goal. Usually if I get out of the trade on the same day, it's for a loss and it has broken a sell signal. Not because I'm looking for a day trade. I trade futures for the day trade futures. So with that out of the way, let's go over what I found to be somewhat successful. Now, another thing I will say about day trading is, somebody once told me I've never met a billionaire day trader. And that could be true. One exception might be Paul Tudor Jones. But I don't know if he's made his fortune off of day trading. I don't think so. I think just that guy just loves trading. Yeah, he takes it to the next level. I think you can find the video still. I think it was made in the 80s. I forget the name of it. But, that guy's trading 20 hours a day. He's insane. Calling Europe. And he's awesome. Paul Tudor Jones. He's so cool. So therefore, I try and do the things that the richest, most successful traders do, and I try and follow that. Not to say you cannot be successful day trading. I think that it can be done, and I am trying, and I think it can be done. There's just no wealthy day traders to follow. There's people that will crush it for the time being, for a year or 2 years or something like that. But there's all sorts of trickery that goes on in that. I'm in this for the long haul and to be wildly successful. I think day trading can play a part in that. I really do. But for me personally, I do not think, just based upon facts, that is the best way to go about trading. Now, let's go over what I do day trading. So I look at the markets, and I on a longer term basis with a day where each bar is a day, right? So it's a daily chart, and I think, do I believe this will be going up or down or kind of flat? And then I will base my decisions from there. Then we'll go to a smaller time frame, a 4-hour time frame. So here today, you could see on the RSI that it gets up to 80 on the 4-hour chart, and things can get a little bit sketch. Here you have the same exact example up here, the same thing up here. Although it did kind of recover a little bit and go up, but just the probability of another move higher in the very short term is less, and that's what is important, is probabilities. That's what's important. So then we can go to the hour chart, and kind of same thing. You kind of break it down, same thing as the hour. in a stretched territory, just like the 4-hour chart is a stretched territory, just like the daily chart is in the stretched territory. So then you think, how much upside am I going to get from day trading today? The probability of something is less. So then we're going to keep moving down 30 minutes, 15 minutes, and you can just continue to do the same thing. 5 minutes is what I like to use as an indicator to rock and roll. Now, I have been day trading futures a similar way to my other strategy, and that is a consolidation period where the moving averages are converging and kind of starting to turn up. So we can see multiple examples of this. Today, we'll go over today, and I did place some trades today we'll talk about. And maybe in the future with these videos, I will continue to talk about the futures trades that I place every day, but sometimes those videos can get really long. But you can see here, right? So, they converge, start moving up. Okay, cool. Kind of similar instance here. So let's go over this today. Going into the day, I wasn't expecting a massive move higher for all those reasons I just discussed about it looking kind of stretched. We were getting close to my short-term price targets. So going into the day was like right here. Okay, so now the mornings right away when the market opens can be a little bit hectic and lots of volatility. Now, I'm on a micros chart because this has allowed me to hone my skills or a strategy and also scale in and scale out and add more and play around with number of contracts, also getting my emotions in check, learning how I react emotionally to trading futures. I also really like to trade YM Dow futures just because of my beloved Dow. But so let's talk about this. Okay, so this all in here kind of meets my criteria. Now the first 15, 30 minutes, I don't really go after it. Today I did right here. This all meets my criteria, right? So it's like, this is how it looks, and you're like, dang, this is perfect. This looks great. Okay. And then I had to stop here and we'll see, boom, get stopped out. And then you think to yourself, okay, should I have gotten out here? Right? And the conclusion I'm coming to with futures is yes, I should just get out, boom, at obvious places. And if it runs, so be it. Because we know that everything can and does happen on markets over a longer time frame. And if you scale that down, over a minute or 5 minutes, it's wild. So, okay, let's zoom out a little bit more here. Where are we? Oh, geez. So I'm getting stopped in and out multiple times in here. And then right here, I go long again right here and caught this move, but not this whole move. I set my stop stop right here, and as this was working, I'm adding contracts and adding right here, right? So, we're in multiple contracts, so that was cool. Now again, so as we move higher, these moving averages, they're moving up, and this looks super bullish to me. So I go after this again. Boom, bad close here. And I'm like, it's still whatever. Down a little bit at this point, probably. Blasted right below here. I wanted to see how it would react around this 21-day EMA on a 5-minute basis. And it had found support, and I thought we're all good. And boom, no. So then that was a loser. And then this huge red candle, boom. I said, all right, that's abnormal. I'm done for the day. And that's actually when I exited my positions on the Qs and the S&P 500, and we can see how the rest of the day panned out. You know, like this bearish action right here. This is bearish action, and that's what we got. And yeah, so that's it with my day trading. I don't know if you want to take my advice on day trading, but this is the only style that has worked for me thus far. So yeah, I'm, like Dow, I do really like trading Dow futures because I've done better with them. That's why. I like Dow. Also, what really got me hooked on futures, while we're at it, and then I'll end this video. I don't know how long this video has been, but what really got me hooked on futures was wheat. And it was all through here. And this was when Russia attacked Ukraine. And so the price of wheat skyrocketing, palladium skyrocketing, and so I was trading wheat futures, and so they'll always have a what do they call it, a soft spot in my heart or something. But yeah, that's it. I haven't had a really good right here. I did this one right here was good. I did catch this move. And then I did catch a little bit of this other move, but I haven't done anything with wheat futures for a long time. Yeah. So anyways, that's it. That's all. I hope you got something out of that. So, all right. See you guys.